Oh, beautiful, beautiful. So, I want to start something here. Let me start from the higher time frame. This is BTC, right? Let me see if this guy is loaded now. Good. Okay, this one is taking quite some time, but daily. Okay, so this is the daily time frame on BTC, right? Daily time frame. So, who can tell me? Who can tell me what do you see on this daily time frame? What do you guys see? Is there a mitigation? Is there a mitigation on this time frame? Is there any mitigation on a demand zone? Anything like that happening here? Hmm?
Yes, sir.
So my calls are always interactive. Exactly. My calls are interactive, so I need you guys to engage. Okay, you guys, when I just when I call, respond, okay. So, was there any type of mitigation? First and foremost, can we determine any direction? Can we
So it's
determine any
bullish.
direction here? Yeah, it's bullish, right? And then,
Yes.
was there any recent breakout structure on that bullish, on the bullish side of things? Was there any recent breakout structure? Plus, was there any mitigation of the demand zone?
No, sir. It's a sweep liquidity.
Hmm?
Yes, there was a recent break of structure.
Fantastic, right? Which is this guy, right? This is the latest one, right? That's
Yes,
the
yes,
external break, right?
yes.
This is the latest one. You can see we can't use this guy here, right? Because that was just like a sweep of liquidity. Neither can we use this guy because that was still like a sweep, right? Because market's trying to reverse, but it will later come and break it. I'm even thinking that the market might come all the way down here, take off from this breaker, from this point, and then break those highs there, and then we might see Bitcoin at 130. But that's my opinion, right? As a trader or as an analyst, you can speculate. You are allowed to speculate, but not based on sentiments. It has to be based on both technicals and fundamentals. Okay? You're not always right, but at least you must have like a speculation. You must have like bias in this market, okay? And you're not doing anything to impress anybody. You're not doing anything from the place of emotions. You're only doing it because your gut feeling and your skills and your analysis are tallying together. Okay. So this was the most recent break of structure. This was the most recent one on BTC, right? I'm trying to get it I'm trying to label it, but the network is just doing wonderful. It's just very wonderful right now. So this is break of structure, right? Meaning that this was an order block here. This is a daily time frame. Do not forget this, guys. This is what I'm teaching you guys, right? This is an order block. You can see this is your daily order block. Let's just say, because of my guys. Let me just put it daily demand OB, right? Write it out because I know a lot of newbies are here and stuff. So that's your daily demand order block. Very, very simple to note, right? Now that we have that order block, we now know that market is most likely to come and react off that order block. Okay, even if it doesn't hold, we should like see a reaction. Even if we don't get a reaction, we should just see a small respect of that zone. It's either the zone is respected or disrespected. That's just it with trading. It's either a zone is respected or disrespected. But let me tell you something, right? You do not own or control that respect and disrespect. None of us owns that. None of us can say, okay, this zone is going to be respected. You can find a zone that has a fair value gap and order block liquidity, and that zone can get disrespected. Okay, but as far as our trading system goes, right, this was a very this was a valid level because we had liquidity there, and then we had a fair value gap, right? So this was valid in our system, but that is still no guarantee that the market will what will respect that zone. Are you guys following me?
Yes, sir.
Yeah. Yes.
Yeah. The thing is, I even want to let me use this chart here because that other chart is filled up with all my plenty things. Right. So let me use this chart. So here we go again. Daily time frame. We're zooming out so we can see the point where that mitigation occurred. Good. So this is it. Oops. I hope you guys can still hear me, please. At any point, if it breaks at any point, just let me know.
We can hear you. Yes, I can.
All right. So this is that exact setup we're talking about, right? We also had another zone here. The market never got back to this zone, right? There was also a zone here. Market didn't get back to that zone. Market instead used this breaker level and caused the mitigation of that zone, right? And trended upwards, right? But it never broke structure above. It just took out little liquidity, came back, reversed into this demand zone, right? So this was a valid demand zone based on our system. Or so we'll just say, let's target daily demand zone, or that was our daily order block. Now, our system, when we talk about SMC, I know a lot of you are curious, right? A lot of you newbie traders are curious. When we talk about SMC, the entry model, our very popular entry model, right, is that we need to find what? Trend.
And then liquidity.
Trend, recent break of structure, right? Then what do we find after? We find what?
Order
Block. What next do we find? Fair value gap.
Then liquid.
After you have seen all of this, right, you can now decide to add a Fibonacci. If possible, you can now say, okay, Fibonacci. You can now say Fibonacci. But it is not a must. That's why I gave it a gap. It is not a must. It's just an extra confluence. Now let's find out. The rule of the Fib is simple, right? Let's start everything afresh. What did we find here? We found an uptrend, right? So let's determine the trend. Market gave us this high, gave us a higher low, higher high, higher low, then did not break above this high, equal high, then a lower low, and stuff like that. But what's prevalent here is that the market is going upwards, right? and this is just a little range, but this move here externally shows us that market is in an uptrend. Why? Because we have these key levels that haven't been taken out. First, we have this key level here, which is this low here, and then we have this key level, which is the highest high the market has come to. Or let's just use this one now. So we need to see, because everything here is like, it's just resistance, right? Everything here is still resistance. Let me even place it like this. So if this has not been completely taken out, we cannot say that the market is in a continuation, right? It has to be taken out completely and then let the candles close above that low. That is when we can say the market has really taken that high. And if the market is not taking that high and it's about to reverse, we need to see this low taken out first before we can now say, okay, this is a higher time frame change of character. Okay, but how do you survive in this market as a trader? Oh, I see some messages in this discussion. How do we survive in this? How do we survive in this market? Right? How do we survive? What do we do? Now, let me show you guys something, right? This is how we survive, right? We expect what? Remember, the trend, we've determined that this is an uptrend, right? We've determined that this is an uptrend. Another thing, we're looking for a recent break of structure. So let me just put this here. Recent break of structure is also known as what? An BOS, right? That's our BOS. And then we find an order block, look for a fair value gap or imbalance, and then liquidity. So based on everything that happened on this daily time frame, this was our most recent break of structure here. This guy here. This was our most recent break of structure. Okay? And after that recent break of structure, the first thing we look for, the order block. It had a valid order block. Okay? It had a valid order block. Now that we found a valid order block, what do we look for again? Fair value gap. There's fair value gap here. I'm not about to start preaching about fair value gaps to you guys, but let me just tell you guys something, right? Price will most definitely come back to fill gaps and then what? Sweep liquidity. It will either run liquidity to fill gaps or sweep liquidity and fill gaps. So the gaps are like magnets. No matter how small they are like magnets, because these gaps are actually inefficiencies. When they say life no balance, right? Somebody might want to say, okay, but my own go balance. So you try to balance it out. You try to balance it out. So the market balances itself. That's why they call it corrections, right? That's why we have we have something like an impulsive move and then correction or pullback or retracement. That's just the market's way of trying to correct itself. It's trying to refill the zones that left inefficiencies. So that's why this system is very, very powerful in the SMC. So what do we do? Now that this has happened, we have the gap, and then finally we have liquidity. What are the liquidity levels? These lows, right? That what do you call them now? The liquidity here. These are stop orders below these lows here. And this is also liquidity. This is buy side liquidity. Everything on top here is buy side. This is sell side. So when we say buy side liquidity, we're talking about stop losses that are above these highs. And when we say sell side liquidity, we're talking about stop losses that are below these lows. As a matter of fact, right, all these support and resistance traders, they try to trade from, any low. Once they see something like this, they'll say, okay, this is resistance becoming support, and then they place their stop losses here, right, and trade from there. So this is what they do, and trade from there. For them, this could have hit TP, and then they might even try to do a rerun again. As soon as the market gets here again, they will try to enter again and feel like, okay, this level, that this resistance that turned support will still hold price. And then what happened to them? Market manipulates them into our order block. So that's why all of these levels are liquidity. Why is this level liquidity? You can hear somebody saying in the comment section that he's seeing head and shoulders. And that's the reason why they are liquidity for SMC traders. Because where he's seeing his head and shoulder like this, he's trying to start selling, right? And so for a while, the market might be going in his own way. You see, somebody who's trading head and shoulders could have even gotten somewhere here like this, right? Saying that, okay, market has already given us like a confirmation back to this level to retest it, and then they get into the trade and see what the market did to them, took out their stop loss. So all these highs there are buy side liquidity, right? And all these lows are sell side liquidity. Okay, I'm not about start teaching liquidity. I'm just teaching you guys one entry model, and this is like a game changer entry model. Now let's continue the class. Remember that this was our daily order block. We only want to see a mitigation. So what's the system about? We want to see a mitigation of a what? Higher time frame order block. Higher time frame order block, right? So I'll just leave it like this. That's the rule number one, mitigation of a higher time frame order block. And then we zoom into 15 minutes, 30 minutes, or 15 minutes. 30 minutes or what? 15 minutes. Wait, are you guys still on this call, or am I just speaking to myself? You guys still here?
Yes.
Oh, fantastic, fantastic. Fantastic.
In and out.
Allowed to speak, allowed to speak. Okay, so mitigation of a higher time frame OB. So you can see in this case, it was the daily time frames OB that was mitigated here, right? And it had gap, it had liquidity before it was mitigated. Now we zoom into 30 minutes or 15 minutes, right? What are we looking for there? Well, in those time frames, right, we're waiting for what? A change of character. And then what? Pick the valid OB. When we say valid OB, what's that OB? The OB that has what? Fair value gap and liquidity again. Even if it doesn't have fair value gap and liquidity. So this was the daily. Now let's zoom into 30 minutes or 15 minutes. Let's start with 30 minutes because I'm not about to start scrolling all the way back. But 30 minutes is good. Now this is okay. Fantastic. So let's just say the first point where there was a mitigation. I'm waiting for this thing to finish loading, right? Good. This first point of mitigation, good. You can see this was where the market first mitigated that OB, right? And the market was ranging there for a while, okay? But we're going to trace it now. How would we have gotten a valid trade from here? See, this is what I would usually do, right? First and foremost, right? You can see this was the first point. Now let's look at this. Let's look at this whole thing. Market did something like I'm sorry, guys. Can you guys hear me now?
Yes.
Okay, fantastic. So market taps here, right? Gives us a small change because it goes above that level there. Then it starts going up, then comes back down. See? To what? To sweep liquidity. And also, this could have been your OB. Now, let me show you guys something, how powerful this system is. Just imagine you got in. Oops, I'm sorry. Just imagine you got in here. Let me use this guy. Imagine you got in here. Let me remove all this. So, we didn't have an order block here, but what is going on with this network? On 15 minutes, we could have found an order block there, right? Support and resistance traders could have also found an order block to trade from. So let's just say this wasn't for us. Are you guys listening to me? Let us say this wasn't That's the high there. So let's just say this wasn't for us because if we had traded this, right, we could have hit stop loss or something because we didn't see any valid order block on this 30 minutes, right? So let's just say this one wasn't for us. Then we waited again. All you need to do is wait again. Now look at this. If we had waited again, using the laws of internal structures, We only pick, tiny significant levels that were mitigated. Now look at this. Okay. Now I would pick here, drag it out, make sure it looks good. Are you all watching this? Are you all with me on this call?
Yes, sir.
Good. Now look at this. Very simple system, right? You guys will be thanking me for a whole year if you can stick to this one system. And look at this. Okay, so now we found our change of character on a lower time frame. Don't forget, we saw the first change of character. Didn't mean much. Didn't do much because we didn't have a clear OB on this 30 minutes. Anybody on the 15-minute time frame could have seen maybe differently. But we did not see that. We didn't see a clear OB to trade from here. We instead chose the one with a clear order block, right? So this is our 30-minute order block after a change of character. So we'll just say 30 minutes OB. And now look at that. There's liquidity, there's fair value gap. Market comes all the way back down here. Some people can choose this point as liquidity. That's still fine. Market comes all the way down here. So let's just say, okay, if we had gotten into this trade, of course, we're not God, please. This network is so wonderful tonight. All right. I hope you guys are with me, please. I hope you guys can hear me now.
Yes. Yes, we can hear you.
All right. All right, but the network is just stalling, okay? Sorry about this, guys. It's been like this all weekend. Even though I'm using like an unlimited data, it's just very, very wonderful. So I haven't seen my stuff yet. I haven't seen my drawings. So please pardon me, right? I'm waiting for my drawings to come back. Wow. Is it that all my drawings went away or something? Some of you, right? Some of you, like, I feel bad for you guys. I don't know why. Somebody is asking me in 2025 that the last bearish candle doesn't have a week. I'm just wondering, like, what does he mean by that? Like, whatever that means. Whoever told you that the order block should have a week? Messiah, can you hear me? I'm
Yeah, I can
asking
hear you,
you,
sir.
is Messiah on the call?
Yeah, I'm here, sir.
Where was he ever mentioned? Where was he ever mentioned that the order block should have a week? Where
No,
was
I
he
just
ever
want
mentioned in any of your classes?
I think I'm getting all right.
No, I'm
I was
asking, like,
thinking
it's just a very simple question, right? Sorry?
it was never mentioned, but
Oh,
I'm just saying if the last bearish candle should have a week before it should be considered a valid order block. I know it wasn't mentioned in my class. I'm just saying.
it was like I'm just saying, like, where did you get the idea from? Now maybe you're trying to invent a new trading system for me to understand this question. Look at this last bearish candlestick here. There was a week. This one has a week, right?
Yes.
But what does the week have to do with anything? That's what I'm asking you. What does the week have to do with anything? Since when did you
Okay.
concern yourself with the candles week before it becomes a valid order block? That's like, you guys make trading too strange. You make it like so difficult, like something that is a myth. A myth. It's just a simple system. Whether or not the candle has a wick, if you see if an order block is actually just is an institutional candlestick that is responsible for an impulsive move direction. whether it has a week or not. That doesn't. Nobody has ever said, okay, you must find an order block that has a week. In fact, before I started the class, I started mentioning everything I was looking for. I mentioned everything as any SMC analyst will tell you. Where is that daily? I mentioned every single thing. Yet you're still asking questions like the order block must have a week. It has to be village people that are trying to convince you about this. I don't understand you. Valid order block, it has a week. Where did you learn that? I hope you did not collect certificate from XM because I'll revoke it. I will fight to revoke your certificate because you didn't learn anything. First, you're looking at head and shoulders, meaning you're biased towards price action. You're a pattern trader. That's why you're considering candles and wicks. All those things don't work. In fact, if you don't combine the system of trading candlesticks with other things, right, with other confluences, it won't work for you. Most traders that trade candlesticks, they also have other confluences that work with them. Many of them have all these indicators and stuff like that. We don't do that. Okay, so you don't learn, right? Learning is by observation. Just observe what I'm doing. I'm not, and then don't ask me those type of questions because you just piss me off. So are you guys still here, please?
Yes, we are.
Yes, you are
Okay,
here.
thank you very
Yes,
much.
we are still here.
Okay. So, I want everybody to just pay attention. I'm showing you the system that has made a lot of traders profit. This is the only thing they look out for. They find the mitigation of an OB on a higher time frame. They zoom into 30 minutes or 15 minutes. Some people even prefer 1 hour. And they find a change of character anywhere. Just determine a change of character at any point here. And then find the order block there and allow the market to come to you. And you will always hit your TP. Look at this. This was a clean 1:7. You can even be catching trades like this once or twice in a week, and you're good. You are fine. You don't need any. Let me tell you guys, don't make trading. See, if trading continues to be complex to you, it means you still don't know what you're doing. You must carry all the knowledge, right, and refine it until you have an edge, until you find an edge in the market. It means if you're still confused about all this, you're finding, okay, this one, this thing, these details that do not matter, then trading will continue to be a myth. Then if trading is a myth, then how do you become profitable? You must find a way to make the system favor you. You must learn everything about what you want to do, and then do all that you have learned. So after doing all that you have learned, all the right actions, profitability is just like an outcome. It's a result. It's a consequence when you carry out the right actions. So a lot of people will have these myths, they have these fears and certain doubts and certain things just wrapped around their heads. They're not practicing enough to even understand the system. So how do you now refine the system? It's like if I buy a new car, for instance, if you have two different cars, you notice that you can drive two of them, but all the driving experiences are different. True or false? If you drive a BM and you drive a Benz, there's a difference, and you need to be a good driver. You need to have driven for long to understand that, okay, these things have difference. The way this one drives is not the way this one drives. There's the way this one turns in the corners. There's the way this one handles in the corners. This one doesn't handle in the corner. There's the way this one accelerates. This one doesn't accelerate. Do you understand where I'm coming from, guys?
Yes.
It's the same thing. When you have a strategy, you're meant to test run it like that until you have perfectly understood it. Until you have perfectly understood it. Right? Until you have perfectly understood that strategy. If not, it will always be a myth. So imagine this very simple system now. Just find the higher time frame indication, come to a lower time frame, find the change of character, take the first order block there, and hit your TP. Bam. You can leave the trade again. Another day comes. You can now look at this. Imagine this one. If you were brave enough to have taken the second chance, look at what happened again. Break of structure, right? This is a clean BOS. So what next? after a break of structure, what do you have? I hope you know the change of character is the first break of structure.
Yes.
Is the first break of structure. So look at this. We now have another. This is another 30-minute OB. Okay, and then there was a huge imbalance here, massive one. Then there was liquidity. Look at that, beautiful. And what else happened, my guys? What happened? Hello, can you see these guys? Can you see?
Yep.
Do you see that the system is actually not difficult? Do you see? I would have kept my stop just here like this. Now, what happened here? Did you hit TP or not?
I did.
This was the high. This was our high. So this is exactly the trading system we're talking about. So you can imagine from the first change of character here, you caught one trade. When market broke structure here, it didn't give you a confirmed move. You see, but it missed this other block here. Then you now came up to this point where another break of structure happened internally there. You saw a massive imbalance. Now, this imbalance was caused by this candle, this red candle here, right? It shows you that buyers had intention. So the institutions and the banks and the big, what do you call them, financial institutions pushed the market in the side or in favor of what? The bulls, in favor of buyers. And because you can see this kind of candle, that's why imbalances and fair value gaps are very important. It tells you which side the market favors. The market is always like, let me just say, you want a one-sided market at all times. The market has two or three sides. There's the indecision where buyers are not winning and sellers are not winning. Then there's the buyer's side where buyers are not in control. Then there's the seller's side where sellers are not in control. You need the market to favor one of those parties at all times. Do you get me, guys? Do you get me? You need the market to favor either buyers or sellers. So when you imbalances, right, on a bearish candle, you know the market is favoring sellers. If you see imbalances on the buyer side, you know that what? The market is favoring these buyers. So you can imagine if I had this opportunity, I would just place my limit and wait for the market to come here. And you can see this was a massive 1:3, right? And that's the way trading is going to be. I could have done this test, right, on many other pairs, several other pairs to show you guys that it's not today. The system works like most times. The system works. But I'm not about to start running another like 1 hour class or something like that, okay? The system works perfectly. And do you know that on these lower time frames, I can keep following the markets? You can see over here, there was a break of structure again, meaning we had an order block. Market came to it and still hit TP again. So these time frames are wonderful time frames so you can just easily make money. You can make your money and just relax. You don't need to chase every trade. You just intentionally wait for the market to come to you once you see a mitigation. So from here now, we've seen a higher time frame mitigation. We zoom into a lower time frame like 30 minutes or 15 minutes and then find a change of character, whether internal or external, right? And then find your order block. It's as simple as that. You know, this change of character, I could have placed it here, right? That was where it occurred. Are you getting it? But I'm sure every one of you can understand that this is also a change of character, right? This was the minor change of character, and this is the major change of character. Are you getting me? Some people will call it change in the state of delivery, right? Good. So, my people, this is the system that I call the game changer. In fact, there are many systems I know, but trust me, to be profitable, you need only one system. And it's only somebody who has money, who has plenty of money, that will try to attempt all the types of systems that exist. Don't do that. If you are still trying to make money in this market, look for only one system. Only one system can make you profitable. Are you guys listening to me? Only one system can make you profitable with this thing. Only one system. You don't need to trade everything. You don't need to trade IFVGs. You don't need to trade what do you call those ones again? The 50% of the FIB. and all those funny things. Only one system can make you profitable. One guy they call Jade Cap, his total payouts from what do you call it now, from prop firms is over $2 million already. So he's a wealthy trader, and he only has one system. For the past 10 years, he's been trading one system until that system started paying him. And that's the same thing you guys need to understand, right? You need to find only one system so that you don't overcomplicate your thinking process. Just find one system and consistently look out for that system and trade it every single time you see it execute. Do you know why you need to execute every single time? Because the market might not favor every single opportunity or event that system shows up. But if you trade it out of 100 times, you might get like 60 good shots. And those 60 good shots are enough to make you profitable. Inside 100 trades, if you're able to win 60, trust me, you can be profitable. Do you know why? Every time you lose, you're risking only, that's why money management plays a very crucial role. Every time you lose only, let's just say you're risking $10. Every time you lose, you only lose $10, right? And let's just say in 100 trades, you lost 40 times, right? But when you won 60 times. So each time you lost, it was 10 times 40, right? That's 40 times 10, which is like $400. Abi?
Mm-hmm.
And then let me use my calculator. You see? So 40 chances times the losses, right? You lost $400, okay? But each time you won 60 times, right? And each time you're risking $10. And then the trade, look at this, for instance, this was a 1:7, this was a 1:3. So let's just say minimum 1:3, okay? Look at that. So you started with $1,000, right? You lost $400. And then at the end of the day, you made $1,800. Are you guys seeing how wonderful this thing is? So has this not covered for your losses? Even out of this 800, haven't you covered for your losses already?
Yes, we covered.
Yes,
we covered.
Exactly. That is how beautiful trading is. If you only understand this, that it's about consistency. It's not about being right all the time. It's about the losses and the wins, but failing forward. Every time you lose, you go back, you learn your lesson. Okay, why did I lose here? Okay, was it the market? Okay, the market there was no volume in this market. Okay, there was fundamental news. There's something like that. But every time I see this setup, I will go again, over and over again. Because I don't know when it's going to be a winning trade. Nobody has that power to determine when the market will give them a winning trade or not. Do you guys get where I'm coming from, please? Are you listening to me? Nobody on earth has the power to determine or decide which trade is going to be a winning trade. Even the so-called A+ setups can lose many times. So you don't get to decide. All you need to do is find a system that works, practice it more than 1,000 times. Just keep going. And then a day will come when all the right operations will now begin to show right results. You need the right decisions, carry out the right operations, and before you know, you begin to find or see the right outcomes, the right results, the right rewards, the right harvest, the right consequence, which is what profitability is. It's actually just a reward or a result or an outcome or what a harvest for a right operation or right decision making in the market. So none of you should have any business saying, oh, I'm unprofitable. No, you're not unprofitable. You're just not used to the system. You're not practicing enough. You're not putting in the time required. You don't understand that the market is binary. What you need is to build the mindset and that confidence to keep trading and trading. Don't overtrade. Just find one system. Every time that system plays out, put your money into it. If it plays out, put your money into it. So the system is able to give you a 70% accuracy. It means that 70% of the time you'll be winning. If the system is able to pay you 30% of the time, then it means that you need to take all the 30% of those chances. So if it's 10 trades, you make sure that you take all 10 trades so that you can have a 30% win rate. Meaning that at the end of the day, right, if your trades are giving you a risk to reward of 1:3, 1:4, you should still be able to make money. So it's not about the person who has the highest win rates. It's about the person who shows up every single time. You need to show up. Somebody who trades like twice and wins twice might claim to have 100% win rate, right? But that does not shape his entire portfolio as a trader. That doesn't mean he's a good trader. Because how about if he takes the remaining 8 trades and he loses, he will now be left to 80%. He will not be left to 80% of losses, right? And only 20% of wins. That's not good enough, right? But imagine you now just determine that you want to take 10 trades, your $100 now, risk it 10 times, divide it, take 10 chances, use $10, and go. So if you now, for instance, you come out with 20, that's like 2 wins out of 10 or 2 wins out of 10 trades, you should now be able to make money. Because if I, for instance, now if I've been trading and I'll determine that, okay, I'm only able to win 2 times out of 10 times, do you know what I'll do? I would now refine my setups to only a 1:2 or 1:3 or 1:4 or 1:5. So if the trade is not going to give me a reward of 1:5 or 1:4, I wouldn't take it. So let's just say, okay, now that I know that I'm only able to win 2 times, I would go for 10 trades again and look for 1:4 setups. Inside of all those 1:4 setups I've taken, I will now lose, let's just say I lose like 8 times or 7 times. I now know that my 1 win can make up for all the other losses. Are you guys getting me? My 1 win can make up for all the other losses. So let me just show you guys, right? So let's just say the win rate has been determined. You now know that, okay, as a trader, you've been able to you've been able to win only 2 trades out of 10 trades. So let's just say total attempts 10, right? So wins 2, losses
8.
8, right? And then now let's just say our risk to reward ratio will not be very deliberate. You see why trading is just about making the right decisions. You need to be a smart investor. You need to have a smart investor approach, right? Be smart about it. Don't overtrade. People who overtrade is greed. And a time will come when the market will shock them. It will take all their money away because they don't understand that this market is not, you don't need to be trading every day. In fact, you are enslaving yourself to the market. You're not thinking well. Your mind is clouded. You're only thinking of opportunities and profits. You don't understand how these markets work. The market's not meant to reward you 247. No. The market will not reward you 247. So just look for the best trades ever. So the smart investor will only look for what? He will only look for 1:4 setup if he knows that he's going to lose 8 times and win 2 times, right? Now, let's just say his capital now. The capital, I should have put it up there, right? This is the capital. Capital is $100. And then risk amount. Let's just say he's risking $10, right? That's 10%. 10% of his capital. A lot of you make all these mistakes. You don't understand. When you say percentage, you don't know. You need to be a smart investor. So now let's start with the losses, right? The person lost 8 times. So that is already 10 times 8. 10 times 8 equals what? $80, right? So it will now be 100 minus 80. The investor is left with only $20. Right? So now let's do the wins, right? If he wins, it will now be $10, right? $10 multiplied by 2. But don't forget, our minimum risk to reward here is what? 4. So it's 10 times 2 times 4, right? So let's find the answer here. 10 times 2, that's 20. 20 times 4. Can you see?
Right.
He has made his $80 back. Are you seeing it? He's made his $80 back. So it will now be 80 plus 20, right? Or let's just say, let's even just use, in fact, no problem. Let's do 80. The $80 plus the remaining $20 that was left. And the guy has made back, this is what they call a break even. He didn't
Yeah.
make profit. He didn't lose
Yeah.
the capital, right?
Okay, get it.
So this is BE. It was a BE on the account. So imagine if his luck changes. Remember, the only thing that separates trading from gambling is the fact that you're able to carry out risk management,
Yes.
proper risk management. Imagine if he continues this risk management and then the gods of trading decide to favor him. He's now able to win 3 times and lose only 7 times. I hope you know that he's already profitable. Now let's do the math
Yes.
again.
Yes.
This one now becomes 70, right? Because he keeps practicing. He is consistent. That's what matters. That's what really matters in this thing. So it's now 10 times 3, 30 times 4, right? He has made $120, right? 30 times 4. Look at that. He just made $120. $120 now plus 30. He has now what? Made $50. And this is no longer BE, but what? Who can tell me the name, please?
Huh?
Profit. Do you guys see it? This is what trading is about. So another month comes. Because he's now more consistent, his wins are now increasing. Maybe he's now able to win 4 times out of 10 trades. He's losing 6 times and winning 4 times. He's now going to start making more money. So let's change the wins to 4, losses to 6, right? And he maintains 1:4 risk to reward ratio. Just in 1:4. Just in 1:4, my guys. Now look at this. This is now 60. On his $100 again, he starts with another $100. 60. So this is now $40. Okay. And then 10 times. Now it's now 10 times 4 times 4. So $40, right? That's in 4 places. That is a whooping. Oops. Sorry guys. This is 160, right? So 160 plus 40. Look at that. The guy that used to just have $100, has scaled his account. And when you scale your account, who can tell me the first thing you do when you scale your account? What happens?
Withdraw $50.
Take out the profit.
You say?
Keep your capital.
You
You take out the profit and keep
Ah.
your capital.
Increase your risk amount.
Yes, sure. Thank you. Who said that? Lami, right?
Yes, increase your risk amount.
Lami, right?
Yeah,
Who said increase your risk amount?
yeah, I said it.
You are good. You are very good. You are doing very well. So now let's just say this guy now his win rate has increased. Who can tell me what his win rate is now, based on this statistics here?
40%.
40%. Good. So imagine he now has the win rate of 40%, and he's now risking $20 now because his capital has changed to $200. He's now risking what? $20, which is 10% of that. Are you saying that he's still maintaining the same rules, right? Hello?
Yeah.
He's still maintaining the same rules, right?
Yes,
Good.
sir.
Now he's now able to see when he loses 20 times 6. So that's 120, Abi. $20 times 6. That's $120. Okay? But his psychology needs to get comfortable with the fact that his losses are now bigger. So his losses are bigger now. So he has to prepare his mind as well. As he's shifting, as he's growing in the skill, he has to also grow psychologically to embrace type of losses. Remember, he was used to losing $10. Now he has to get used to losing what? $20. That's how growth comes. Okay? So you can imagine this 200 minus 120. He will now have what? He will now have how much? How much is left, guys?
80.
Good, $80. And then over here now, it's now 20 times 4 times 4. So let's do it. $20 times 4 times 4. You see? Just imagine his 4 wins were able to bring him what? $320. Just imagine that. 320 now. Plus what was left.
Plus 80, that's
How much is it, guys?
$400.
You can imagine. He just flipped his account by being consistent. He has made $400. So how much is the profit now? How much is his profit? So what do? We say 400 Abi minus 200 equals to what?
Goes to 200.
200.
Imagine he just made profit on a $200 account just by maintaining the same rules over and over again. So are you guys getting me now? So
Yes.
I have not only taught you a particular now you guys owe me. Do you know what you owe me? You owe me a lot of back testing, and then you owe me a lot of what? Consistency. Are you getting me now? This is the first time I'm teaching the community how I trade and stuff like that. Don't take it for granted. Like I said, if this pays somebody, it should not be different because the market is no respecter of persons. The market is not partial. The market will respect you if you're carrying out the right actions. So who's going to vouch that they're going to begin to make money from today just by sticking to this one system?
Hello, sir. Please, I have a question.
I will.
Who's the one?
I.
Yes, who?
100. I will.
Fantastic.
Please, I have
All right,
a
who has a
question,
question? Let me hear you.
I have a question. Please, how do you do your back testing? Do you use an app or probably you just go back to past data, maybe like a month, 2 months? Like, how do you do your back testing?
Don't worry, just watch the video. You'll see me back testing. That's the answer to your question. Yes, any other question, please?
Thank you, sir.
Yes, any other question? Any other question?
I want to also add to it. I'm doing a 1 to 3 risk reward, but trying to keep 50% trade, like out of 10 trade, trying to make sure I maintain 5 wins.
You can't maintain 5. If you've been listening to me, there's nothing that is constant in these markets. I keep on telling you. The only thing you can control is your risk management. You can't control your win rate. Nobody controls their win rate. Nobody controls which markets will favor them or not. So what you're saying right now is unreasonable. Like I've been telling you, there's no professional trader that controls how many times he's going to win in a month. There's some losing months, there's some winning months. Nobody controls the outcome of trades. Okay, so what your question is already starting on a business foundation.
Okay.
So is there any other question, please?
I have a question.
I think the next call we'll need to have is like a trading psychology call, because a lot of you are still dealing with control issues. You don't understand that the market doesn't obey you. The market obeys you. The market doesn't care about you. Market doesn't care about your $5,000. Market doesn't even smell you, doesn't see you at all. It just gives a reward for the time that it plays in your favor. It rewards you. Other times it might not play in your favor and it will not reward you. It will even take from you. Okay, you need to get comfortable with that fact that you have a 50% chance. It's a probability game. And what makes us survive in this game is proper risk management. A word, as they say, is enough for the wise. All right. So, is there any other question,
Okay, I
please? Sorry,
understand.
Lieutenant.
Oh, thank you,
sir.
Lord.
Yes.
While waiting for 1 to 4
Yes.
risk reward, is it advisable to take partials, or you just wait to full TP or stop loss?
If you take partials, it's going to reduce the reward now
Yeah,
for the
overall.
risk. Taking partials means that you are taking half of your stake in that market away. So now something that should be giving you $40 will now give you only $20.
Even if it hits TP.
If it hits TP, it's only going to hit TP on how much is left, what is left of what you're risking.
That's what I mean. Even if it hits TP, that's even if it hits TP, it's going to hit only half of what you have staked on it. So you didn't get the full
Yes.
amount of which you calculated.
Yes.
Okay.
Yes. So when you secure partials, sometimes you are changing yourself. The only time I would advise you guys to take partials is when your psychology is not ready for the trade. Maybe you're risking too much on that trade. So you already begin to have high blood pressure. You can go ahead and secure partials. Or maybe the market doesn't have enough volume and you feel like, okay. But otherwise, right, if you want to build confidence in this market, just wait until it either hits your stop loss or it hits your take profit. Okay?
Okay, sir. Thank you.
You will
Okay,
not die.
thank you.
You will not die if it happens. Yes. Yes.
Okay.
All right. Any other question?
Let's see.
No
Nope.
question from this end.
Ahmed was asking a question, or Ramamtu wants to ask a question.
Nah, me, I'm on spot, so no questions.
Even after I've shown you this system, you are still on
No,
spot
I am.
zone.
No,
Would you like to try it out?
I'll try it out, but you know what I told you about me? It's not the calculation, all that. It's actually being consistent. That's my problem.
Okay, no problem. Ahmed was asking me a question.
Yes, sir.
Okay, go ahead
Sir.
and ask.
Sir, what is the meaning of rejection candle? Rejection candle.
What's the meaning of what?
I don't understand.
Rejection
Rejection
candle.
candle.
Which
Yes.
one?
Rejection candle.
Yes.
Now, I told you guys that I don't trade based on candlesticks. I'm not a candlestick trader. Neither am I a candlestick pattern trader. But from the word rejection candle, it only means maybe a candle that's like a shooting star or a hammer. Those are rejection candlesticks. Just go and find out what a hammer is or what a shooting star is. You find out what rejection candlesticks are. Candlesticks that have a lot of wicks behind. Like for instance, if I see something like this, I know it's a rejection, right? Because it means that what the buyers are rejecting lower prices, so they are trying to push the market up at all costs. So these are rejections. Look at this.
Okay. Thank you, sir.
Buyers are trying to reject lower prices. That's how you say, okay, this candle is a rejection candlestick, right? All right. So the network isn't so good anymore, guys. Okay, now on to next time, guys. I hope to be having like
Sir, do
one
you
of these
think
kind of
1 to 3
once in a
risk
while.
reward ratio is not a good idea?
It's working now.
Sorry?
Do you think 1 to 3 risk reward ratio isn't profitable enough for a trader to work with?
Oh no, you're getting it wrong. I said if you're losing more times than you're winning, you should target higher risk to reward ratio. I did not say
Okay.
that when we should see risk to reward. That's why I said you should go and watch the video. You joined very late, Joey FX.
Yes, I know,
Your
sir.
questions
I know, sir. I'm just trying to
will
catch up with some little
eh?
questions. I've been troubling myself
No,
with.
now don't ask me questions. Just watch the video.
Okay,
Try and
sir.
watch the
All
video,
right.
okay?
Thank you. Okay, sir.
Because your
Thank
questions are
you.
not founded properly.
Okay. Okay.
If not,
Thank
now
you.
I go send guys where they can't hold you down, but they flog you where. No.
No, miss. I know
All
it can
right.
be stressful sometimes. Sorry. Thank
All
you.
right. All right, guys. I have to go
Thank
now.
you, sir,
Take care of you guys, okay?
Thank
for the
And
class.
you.
everyone,
Thank
please
you so much.
Thank
try
Have
you.
a
and
good night,
practice,
right?
okay?
All right,
Yeah,
thank
we
you.
All right.
will. I mean,
All right.
it's
Have a
made
good
it
night.
so much simpler in my head.